everybody. Welcome to Fed Wednesday. My name is Merlin Rothfeld. It is the Trader Merlin Show, and I'll put the dates up here and, of course, the contact information for you to email me at TraderMerlin@gmail.com. The much-anticipated Fed announcement came out, so I'm sure most of you are glued to that, know all that happened, and I feel like I'll be doing a bunch of rehash if I just go over it, but I got to cover that stuff because people have asked. So, hello, everybody. I see Ricardo, you're first in the room today. You beat Les. It's hit or miss. He used to be 90% time first in the room, but hello, everybody. Joachim, good to see you. You're probably getting sick of me, Joachim. This is the third class you've had with me today. Well, this isn't really a class, but third time you've spent 3 hours a day with Merlin, Joachim. You got to be getting sick of me, buddy. Got to be getting sick of it. Hello to Texas. We got California on the West Coast. Where are you from, California? Where are you at? In Cali, I know that. But anyway, let me show you my graphic here. A nice stern picture of Jerome Powell looking all upset. I noticed that Mid-Journey has now fixed the hand issue. Pretty happy about that. He's got some nice hands. There are no missing fingers. And I just put Fed pause. So this is one that I will say is was kind of easy to predict, right? And I listened to the entire speech today, the press conference and the initial release. And honestly, I have to say, I think Jerome Powell said everything exactly the way he should have. I think that he really laid out the framework for kind of what we've been talking about in this program, which is with the Fed, they've been raising so aggressively that you run into the risk that you've moved too far too fast. So remember, when they initially started this raising rate environment, it was 75 basis points, and then it dropped to 50, and then we dropped to 25. So there's a plane, which we've talked about in this program before. Les remembers this one. He's got the actual name of it, I think, because he's down in Cape Canaveral. But the nickname for this plane was called the Vomit Comet, and it's where they would test for weightlessness in space. And what happens is they're going up at a very steep angle, and then they cut the engines. And that's where we are right now. So as of today, think of our markets in that Vomit Comet going straight up, and they just cut the engines. So at this point, the question is, what happens to the plane now? Does that plane keep moving on up with momentum and inertia from the initial thrust that was going up? Or does all of a sudden the plane start to fall real quick? And in this reference, we're going to be using the plane as a metaphor for the interest rate policy. So now that the plane is paused, what happens to the passengers on that plane? So one of the things, I have made my little note sheet here, so apologize if it looks like I'm reading from something, because I am. There you go, Les, the KC-135, the Vomit Comet. He said some comments today that I want to read out loud because I feel like I should have written his speech. It was pretty much what we've talked about the past few days. He says, the full effect of our tightening has yet to be felt. And that's a point I keep making, which is why I'm kind of worried that they're going to raise too much and it's going to be too aggressive because we haven't felt the impacts from these rate increases, right? Especially, we still have some of those 50s that haven't impacted the markets yet, maybe even some of the 75s. So that to me is the big challenging part here for Jerome Powell is how do I slow things down just enough to see if we get that momentum from the rate increases? Because of course we're seeing the impacts of it. We're seeing inflation start to decline. It's still not at the 2% that they want. And by the way, Jerome Powell did say, while you're looking at some prices falling and inflation coming down, the core measure is not dropping as quickly as they want. So they may be more aggressive going forward, which fine, I get that. Be aggressive if you need to be. He also cited that we have credit tightening headwinds that they haven't seen the full effect of yet, so we might see more problems from credit, which again lines up with my argument for a weaker second half of the year. He said nearly all members see some further rate increases this year. Whoa, hold on a second. So my thought was you're going to see them hold here. I thought we'd stop at 5.25 and then wait a meeting or two to see what those impacts are and then act accordingly. It sounds like, at least from what they're saying today, that they are already planning on doing more rate increases this year. So that's why we saw the numbers change today. So let me do a poll since I enjoy doing polls. What will the Fed funds rate be at the end of the year? Where are you, TJ? That's where I need you. I need TJ to type in all this stuff so I can talk and do these things. So we'll do same as today. We'll go plus 25 or plus 0.25. We'll add an option. We'll go plus 0.50 or I'm at one more and go negative 0.25. Okay, so oops, not 25 full points. We'll go 0.25. All right. Sorry for the delay in me typing that out there, but there is your poll. What will the Fed funds rate be at the end of the year? Same as today, 25 basis points higher, 50 basis points higher, or 25 basis points lower. Now, those are just the close options. We might see some big deviations from that, but it's interesting because at this point, the Fed is going to just pause just to see what the impacts are. Now, they're going to wait because the next meeting, let me bring that up for you guys so you can see the calendar here of when the next meeting is. Make it nice and easy for everybody as opposed to stare at my disheveled work-at-home mug. Here's your FOMC watch, Fed Funds Watch tool. Our next meeting will be July 26th. So here we are on June 14th. So we've got 6 weeks. All right, plenty of time. Notice right now, as I'm waiting for your results to come in, they are anticipating a 64% chance of a 25 basis point increase at that meeting. Now, if I had to vote in this poll, which I did not get a chance to vote, I wish I could, I would say that they're going to increase 25 basis points. By the end of the year, they'll probably increase 25 basis points. Now, remember, we have quite a few meetings between now and then. So 12% of you, here's the results of the poll. 12% of you said they're going to drop 25 basis points. And before I run through all the scenarios, I'll run through each one. Still waiting for the poll. It should have popped up there, Questlock. Only 17 people got to vote on it, but it was up in the chat. Sorry, I ended that one. You can type it in chat if you want. So I'll just start with the same as today. Only 5% of you said same as today. Now, that would take a lot, right? Because we have, between now and then, let's see how many FOMC meetings we have. I believe we have 4. We have one July 23rd, September 20th, November 1st, and December 13th, right? So we have 4 meetings left for the year. So they'll probably raise or down a little bit. That's weird that some of you didn't get to see the poll. Some did, some did not. I apologize for that. That's a YouTube question. Not sure what happened there. All right, well, you could type in a chat just to play along, but it'll modify the percentages just a little bit. So the probability right now for the traders of the Fed Funds futures are saying a 64.5% chance of a 25 basis point increase at the next meeting. Ooh, Questlock, that's aggressive, buddy. So if we see them do no change by the end of the year, meaning everything stays calm, that tells you that the data is, they're not certain. Right? It tells you they're still slightly uncertain. If they keep it at 5.25 by that December 13th meeting, that tells you that they're kind of uncertain. And you're like, well, wait a minute, why would it be uncertain? Because if they were certain about a direction, either up or down with regard to the Fed funds, they would be raising or lowering the Fed funds futures. But if they're uncertain, they'll keep it and be data dependent. So I think right now, if you have no change by the end of the year, it still remains a lot of uncertainty going forward. Now, the second option on that list, my streaming software froze. This is wonderful. Second option on that list, I can't see it anymore because it's off the screen, and for some reason, my web browser froze. So I'm not sure why that's going on, but I will wait for that to hopefully clear up. I hope I'm still streaming. I've seen no alerts yet, except for me having a frozen stream feed. That's kind of awkward. All right, I can't see the percentages right now, and I don't even know if anybody's there because I can't see it chatting and I can't refresh. So let me, it just closed out that browser. Give me 2 seconds as I open it back up again here. For some reason it crashed on me, so I will start all over again, go to my YouTube studio, and join that stream with you guys so I can see all your comments, questions, and feedback. Let's create, go live, and there's my browser. Okay, so I should be back to join you guys right now. Excellent, there we go. Sorry, I don't know what happened there. Something froze on my browser and all the data went away. So we had 5% probability of no change, same as today by the end of the year. Let's look at the first choice, or the next choice, which is they drop 25 basis points. And this could be a very real possibility. Between now and the end of the year, what would we need to see? You guys can tell me, what would you need to see, or what would the Fed need to see to start dropping rates by the end of the year, right? What are some factors that might drive that decision? Remember, they have a dual mandate. They have full employment and price stability. That's their major objective, which is why they're so aggressive on inflation right now. So by the end of the year, in order to see them drop 25 basis points or more to start cutting rates, we would really have to see inflation plummeting, like inflation really dropping. We see GDP starting to curl back up and grow, and we'd also have to see unemployment stay relatively stable. Now, Rob, would be the opposite. If they're going to start cutting rates, you need to have a very low PPI, right? You don't want to see inflation at all. You want to see a contraction. So we'll start with a negative 25. Exactly, Les. Inflation numbers going down. One thing I wanted to point out here, just in case you guys didn't listen to the press conference, he mentioned 2 unemployment numbers for the year. I think right now we're at 3.8%, if I'm not mistaken. It's 3.7 or 3.8% right now in the U.S. He said by the end of the year, the consensus from the panel was a 4.1% unemployment rate, and by the end of next year, 4.5%. So while that sounds like an aggressive increase, it's a full percentage point off of our lows because we were at 3.5%. Well, they're saying 4.5 by the end of next year. That's still historically very low. So I think that those numbers are lowball estimates. I actually think it's going to be higher than those going forward because we're starting to see more AI impact. We're starting to see more of a labor crunch. And if that credit market tightens up, then that's going to impact businesses as well. Now, one of the other comments he made was exactly on that. He says, higher interest rates will slow output growth, weighing on business fixed investments. So again, businesses not making the capital expenditures in their infrastructure, that of course is going to have a big impact on it. So nobody here really knows which way it's going to go. It's all saying, if this happens, then these are the logical actions. If this happens, these are the logical actions. So we covered the 25 basis point cut. In order to see that 25 or 50, whatever the cuts may be, we'd really have to see inflation get down towards that 2% mark. Now, if we keep it the same, that means uncertainty by the Fed. We're not quite sure. We haven't seen what that data has done yet. We haven't seen the impacts of those rate increases. So we'll hold it right here and not take any action, which in my mind is the prudent thing to do for now. Just pause, wait, because we're not in that dire situation anymore, right? We're not in that, oh my goodness, inflation at 9%. Yeah, it's only at 4% or increasing by 4%. So it's a lot better, still not where they want to be. Now, the other two scenarios, which I saw some of you guys put in there, and that was 35% of you said raising 25 basis points. 47% of you said raising 50 basis points. Again, let's run through the 50 basis point increase by the end of the year. What would that have to mean to you? That would mean that one of those 3 variables is going to change. Number 1 is going to be that inflation starts to surge again. And based off the conversation that Jerome Powell had at the press conference, it sounds like that's what they're believing. It sounds like they believe that inflation is going to rear back up and start to surge back into the end of it. Maybe not as aggressively as it did, but it's going to come back and start to move back up, which is why they did not cut. Now, he was asked repeatedly, why didn't you keep raising right now? And he says, well, just as I've pointed out, we just don't know the impacts of all of our previous rate hikes yet. We were really aggressive. He said, I have three main objectives with this. Number 1 was the speed of tightening. Number 2 is how high do we go? And number 3 was how long do we stay there? So we've already solved the first one, which is the speed of tightening. I mean, they went 75, 75, 50, 50, super aggressive. It's one of the tightest, fastest raises in rates in history overall. Then, how high to go? And the consensus is that we're just about there. They kind of said maybe 4.5%, 5.5% might be that target. Well, we're almost there anyway, so 5.5%. So kind of flattening out. And then the last one is how long do we stay there? That's where we're at. So we kind of passed those 2 of the 3 obstacles. Now it's how long do we stay there before they actually start cutting. So, some good input from you guys. I see, a wide variety of opinions here. And bottom line is, we just have to go with what the market's going to give us. And this is why on this program, I will be looking at the economic data, giving my 2 cents on what those trends are. Now, you and I are speculators, right? We're out there making trades and investments based off our thoughts, opinions, analysis of the markets. Let's go and see what the big money is doing. So, as I pointed out, this is for the July 26th meeting. Right now, the July 26th meeting saying a 65% chance of a 25 basis point increase. But what about the end of the year? So let me scroll up here and go to the December meeting. There's December. Okay, so right now, you see a pretty good dispersion of numbers. And this actually kind of ties into pretty much what you guys just did. So bravo on your running the Fed calculations. There's a 39% chance that by the end of the year, December 13th, we'll be right where we are at. There's a 43.5% chance they will raise 25 basis points. a 6.1% chance of a 50 basis point increase, and there's actually a greater possibility of a 25 basis point cut than there is of a 50 basis point increase by the end of the year. So I think this is very logical. I think we're going to fall in between one of these two categories. I kind of feel like they will pause and just hold through to the end of the year. I know it seems boring. Where's the excitement in that? But it's just waiting to see how all of this impacts the bottom line with that data. So let me go to our calendar here so I can show you some of the numbers that came out. We do have some good numbers coming out tomorrow as well. But here's your Fed funds rate. There's the chart. Better be coming up here. Where did my chart just go? Hello. That's weird. It jumped the whole day. So it's the first time we've seen leveling off of rates since 2018, right? 2018 is the last time they stopped raising and leveled off to the upside. I agree with you, Oliver. He says, follow the markets. Yep. You know, we can have our opinions, but the bottom line is the market's going to tell us what to do. But these types of things do clue us in. The fact that they paused tells us that they're worried that they may have raised too quickly. At least that's how I interpret this data, right? And I mentioned this, that's what they should do, right? I think they did raise too quickly. We don't know the impacts that this is going to have on our economy yet. Again, it takes 9 months to 18 months to filter through to the bottom line of the economy. Well, we still have a lot of damage to come potentially. And he pointed that out in his meeting today. He also mentioned he expected subdued growth, right? That was a good one. And a lot of really kind of questionable comments here. He says nearly all members think there's going to be some rate increases this year. So that would line up with the 25 basis point increase that most of you had thought was going to happen going forward. So that's where we stand. Let me see what Tom say. The economy heals itself with a little improvement in energy policy and other improvements. The Fed can take credit for improvements while the supply side take care of business. Yeah, you know, unfortunately, what I don't like about all this is it's manipulation of the markets, right? So you're getting the Fed manipulating things to fit an agenda. And quite often when you modify one thing aggressively, it's at the expense of something else. And we just don't know where that's going to be yet. You know, historically, we've had John O'Donnell in the program many times, and quite often what he will do is, what John would say is, you know, these actions are going to be coming at the expense of something else. And with these rate increases, inflation should be coming under control. Well, what happened because of our actions here? If you look at the rate cuts in Fed funds futures, we're at, hold on a second. We were right here at 2.51% in January 2019, and then all of a sudden we went down to 0.15% in March of 2020. So in a year, we went from, dropped 2%, over 2% fully. We also had that same impact here. If you look at the financial crisis that started really in 2007, we went from 5.25% all the way down to, let's call it 0.15 by December of 2008. So in a year and 3 months, we went from full throttle to slam on those brakes. Actually, I guess it would be the opposite. The slam on the brakes would be the high interest rates to full throttle stimulate the economy. So these have the consequences of giving us the volatility. And while it may seem bad on one front, it's good because it creates volatility and it creates swings in market prices. So we will have to wait and see how the rest of the year plays out. I personally think that this is going to add a little bit of pain to our markets. And if the markets do start to soften and get really bad, well, what you're going to see is maybe a rate cut start to come in near the end of the year. Let's see. Tom says, if he doesn't know the impact, is there really any impact? Printing and bad policy had clear impact. 0, 25, 50 basis points doesn't matter much when compounded inflation is more than 40 times that. Well, it's the challenge I see, Tom, is all of the impact. So it's easy if we have one set of variables to focus on and say, how do my actions impact that, right? You guys look at just raising children. How do my actions impact that child? But now imagine you have 360 million children, right? How is it going to impact everybody? And every one of those entities is businesses, it's people, it's consumers, right? There's so many facets to it that they have to wait for data to determine where the strengths and weaknesses are showing up in our economy of those rate hikes. It's not clear cut. And there is no standard rule book that says, oh, we raised 500 basis points, right? We raised 5%. Oh, then this happens and this happens and this happens. All we know is probability historically will tell us that this is normally what happens. But I think that this time is different, right? You have the Fed funds rate rocking the upside. You've had commercial paper was really cheap. Businesses had access to super cheap, easy money. You had the housing market just exploding because of all the stimulus package in 2020. I mean, one of the biggest runs we've seen in housing markets ever. That's a one-off. By itself is a certain challenge for our market. So, Powell is not going to know everything, and they have a really tough task. If I was Powell, I would probably look like this too. I'd be angry all the time because I'd be frustrated I couldn't get it right because it's constantly going to be changing over and over and over again. Dwight says, do we know how much the data is lagging behind the Fed decision? It fluctuates. Like Mike said, my mentor said initially he said between 6 months and a year. Then, another guy said between 9 months and 18 months. It's lagging, I would say, at least 9 months. At least 9 months when they make these rate increases before you start to feel the impacts for businesses. And they really spend a lot of time talking about the housing market and the potential impacts the housing market's going to have here, because now we're seeing housing markets start to slow down. And their comments came up about rents. Because if the housing market starts to crash, you're going to see rent prices surge again, and that could create a whole nother set of problems. So, I love those games where they have all the dominoes laid out on the floor and they hit one and it just starts to go in different directions and all kinds of different things happen. This is probably the most intricate puzzle you could possibly imagine, is the impacts of all of this from the Fed. So I don't try to make sense of it all. I try to anticipate how one action might impact here, and that might impact this one, and therefore I can make plays on it. That said, I did buy some puts today. I bought directionally puts on the triple Qs. I don't like the trade very much, so I went rather light with my position. I'll have a stop. Let me bring that up for you guys just so you can see the Qs. It was just it's a real aggressive play. I'm not really that comfortable with it, but I do feel like you're going to see some profit taking come in the situation tomorrow. So I have a stop loss in the triple Qs at 373. If we get above 373, then I will dump my put position. I did a shorter term one too, so I'm only in it for a couple of weeks. So I will probably try to exit this by Friday. Right now I'm underwater a couple $100, but that's not that big of a deal. We'll have to wait and see what happens tomorrow. But yeah, I shorted it. It's easier to see on the NASDAQ futures chart here. We talked about that overhead supply level, which we got deep into it today. Didn't break out of it, that overhead supply zone, which peaks out on the triple Qs at about 15,255, and we're at 15,199 right now. So there we go. We'll have to see if this one pans out. But again, I didn't go heavy. I wanted to, but it's hard to go against this trend in the NASDAQ, which has been so unbelievably strong. Let's see. I quit if I was Jerome Powell. No way. Why would you? The stress on his shoulders has got to be just insurmountable almost. It's just too much. However, he's getting paid pretty good money. And then after he finishes this stint at the Fed, he'll get paid $200,000 to go speak for a few hours at Goldman Sachs and Merrill Lynch, and he's got the easiest gig in the world. He's just going to now travel around the world, write books, and talk about running the Fed. Honestly, it's a small sacrifice to pay a few years, and you have basically written the golden ticket. I mean, Bernanke and Janet Yellen both took advantage of that and made a ton of money after it. I'm curious, does Powell care about how much it affects the stock market? So, Lisa, I'm going to put on two hats here. I'm going to put on the collegiate textbook, what should the Fed be concerned with? And then we'll put on the real hat of markets. In one sense, Jerome, if you're looking at the collegiate textbook, and I'm reading through page 875 of my financial management organization structure and government entities, it says the Federal Reserve has no interest whatsoever in the performance of the financial markets. The Federal Reserve's mandates, there are only two, are stable prices, so what they want to make sure is inflation is under control, and full employment. That will come at the expense of the stock market, and sometimes the actions of the Fed in order to promote price stability and full employment could severely impact the equity markets. Now that's textbook right there. The reality is, he better be juicing and goosing that market as much as possible. There are forces that may not be as powerful as Jerome Powell with regards to his words and his actions and his market influence, but they have a lot of connections, and you don't mess with a loan shark. So you go up against some of these firms like Goldman Sachs, JP Morgan, Merrill Lynch, who've got billions, and BlackRock, got trillions of dollars invested in these markets. I'm pretty sure that Jerome Powell's thinking in the back of his head, I can't mess these markets up bad. I need to make sure I take care of the market. So in theory, he's supposed to have no interest in the stock market. He'll even say, I don't care about that. I call BS on that one. I really do think he does have an interest in the equity markets. Of course, his team's out there. The Fed members are actually investing in trading on that based off their decisions. So that's a whole nother ballgame conversation we could have about the Federal Reserve. They did the exact opposite in 2020. Well, I mean, they juiced the equity markets, right? You had one of the biggest bull market equity runs. And why? Because rates were dropped down to zero. And then we had government say, print more money. Let's just give people stimulus checks. Let's give businesses non-repayable loans. So you're going to give me a loan that I don't have to pay back. That's not called a loan. It's called a gift, right? If someone gives you a bunch of money and says, hey, this is a loan, but you don't have to pay me back, that's a gift, right? That's a totally different tax treatment. Drives me nuts that they do that type of stuff. Anyway, as Oliver says, can't mess with the elite's money, right? All right. And for you and I, we step back and look at it and like, okay, wow, great. The markets were saved. The economy came back. This could have been a lot worse. Yeah, you look at your 401k and you kind of base the actions of the Fed off your 401k, right? Or your retirement account. It's like, all right, great, I'm up 20%. You're like, I don't care about inflation. I don't care about GDP or unemployment. Are my investments going up, right? Am I preparing myself for the future? That really is the way it is. Gilbert says, isn't that insider trading? Yep. So Gilbert, they say that no Fed member can do that, so that's illegal for insiders at the Fed to do that. Again, that's questionable. One thing that should have you all really concerned, and I actually think, what's her name? AOC, Alexandria something. She was writing a bill that would make it illegal for politicians to trade stocks or equity markets. And I'm like, hallelujah. I never thought I would see this day come. Just so you know, it is legal, legal. It is okay for your senators and congressmen to vote on a bill when they already have built a huge position that would benefit from that bill. Completely insider trading, and in my mind, that is absolutely illegal, because if I did that, I'm going to get busted and go to jail. So if I have a company and that company is going to release some really important information that I know is going to jump the stock price, or I issue a press release, and I go and buy 1 million shares of that company before that announcement, and it's guaranteed money for me, that's illegal. But if a politician was to vote on, let's say, infrastructure improvement bill, and they know that 85% of that bill is going to go to road construction and materials companies. If I went out there and I bought Marietta and 3M and a whole bunch of other materials companies' stock, that's legal. I can do that. And that is the problem. The other side of this that I'd say was, it's funny you say Oliver asked Pelosi. The most active insider traders on Capitol Hill wasn't Nancy Pelosi. There was actually like 3 Republicans that led the list. She's just the one that was the most notable. And it's not a Democrat-Republican thing. They're all doing it, right? They all go in there with some money in their bank accounts and they come out multimillionaires because of this. The reason you should be concerned about this, and I wish that we had some platform to make this illegal for politicians, is if there is something that's going to benefit America, which is what our politicians should be doing, and that bill gets presented to them, quite often they're going to try to juice their own pockets by the lobbyists pushing those bills or against those bills. And wherever they make the most money, that's most likely how they're going to vote. And to me, that's really the problem. Whereas, I'll make something up, but let's say that there is an initiative to, I think this is one that many of you would probably get behind. There's an initiative to give help to all war veterans from America that are homeless, right? There's benefits that they would get immediately that would help homeless war veterans living in America, right? I think we would all agree that we should be supporting our veterans. They didn't choose to go over there. They did what they were told. They went through a whole hell, and now they're back here suffering. If a bill went through like that, okay, great. It should pass, because that's what I would deem to be better for America, or good for America. Help those individuals that helped us have our freedoms. But that politician could vote against that bill and possibly even short the markets, knowing it would line their own pockets. And to me, that's the problem. It's not here to do what's right for the country. In many cases, it's to line their pockets. Now, what should be illegal, 100% illegal, is no politician should ever be allowed to short. Now, this is one that I wish they had a little, there should be a page that says they shorted these stocks. So, for example, we just had that infrastructure bill that passed a while ago. If all of a sudden you saw senators shorting, and they're basically shorting the S&P 500, shorting the triple Qs, shorting the NASDAQ, shorting the Dow, That tells you they believe that the markets are going to be going down, and they should never bet against America. That's the one that drives me absolutely crazy. They should never be able to bet against America, never be able to go short. It's kind of like Pete Rose betting against his baseball team. Pete Rose never did that. Pete Rose always bet on himself to win. And all of our politicians, if you're going to wager on us, you better bet on our country to win. They should never be able to allow to short. Anyway, I'm on a rant. Why'd you guys start me down this avenue? We were talking about Powell, and all of a sudden I'm going on a political rant. Thanks a lot. Yeah, no shorting for politicians. No shorting whatsoever. That should be absolutely illegal. And it should be fully transparent. There should be real-time disclosure if they ever even hit the short button. Okay, don't forget unlimited free money for banks behind the scenes. Oh, yeah. They turned off the liquidity tap this year. Yep. You know, it's just more market manipulation, which at this point I've become numb to. Right? I want to know about it just so I know what's going on, but it's just frustrating. It really is. Really, really just frustrating. SoFi increasing their yield to 4.3%. Surprising because rates didn't go up today. Alan, we like rants. I get myself in trouble. I notice sometimes when I go on the rants, the viewership goes down. So that's why I don't want to do any rants. My rookie Pete Rose card wants him to be exonerated. I'm with you, Talking Monkey. I met him a couple times, and I really wish that Pete Rose would get in the Hall of Fame. There's people who've done far worse that are in the Hall of Fame. You know, you look at some of these Barry Bonds and Alex Rodriguez who were juicing their bodies with steroids, which was illegal performance enhancement drugs, guilty as sin. Yep, they're in the Hall of Fame. Yet a guy who bet on his team to win doesn't get into the Hall of Fame. And the irony is, if you watch any sports match now, you watch football, basketball, hockey, hell, tennis, you have all these ads for sports betting and sports betting. It's like, oh, come on. Anyway, there goes the rants. Let's see what I got here. They always find a loophole. They always will, Lisa. But, you know, if we made it a crime, and again, we should take it even one step further. We should take it to, if you are a publicly traded company and you do something that's really bad, like, you know, what happened with Wells Fargo years ago. Wells Fargo, I mean, come on. No one went to prison for that? You were telling your employees that there was quotas to open accounts, so you were forcing employees to do things that they didn't want to do, to open accounts. Dead people were getting new accounts opened up. All of a sudden, people were going, wait a minute, how do I have 5 accounts at Wells Fargo? Because they illegally opened those accounts behind the scenes, and that was directed from somebody high up. That person needs to go to prison. Therefore, in the future, that won't happen again, because people go, I don't want to be in an orange jumpsuit with Bubba. That doesn't work for me. It all looks so overbought. I've seen a lot of people calling for a pullback to 40 or 430 by Friday. Not even a 2% move. Thoughts? Well, I feel like there's a pullback coming. It's been too strong, and of course that's just a gut feeling. Now I'm kind of using that with the overhead supply on the Nasdaq, but let's look at the S&P. Right, the S&P came right up to it today. I mean, my zone, which isn't perfect, it was 44.39, and today's high was 44.39.50. So we just gave it a little kiss, and then sold off from there. So, you know, we're an overhead supply on the S&P, or an overhead supply on the Nasdaq. Now the Russell, who cares? You're not in your overhead supply. I mean, actually, technically we are, aren't we? We've got this 1930 line that we talked about that hitting. Hit 1930 today. The high for the Russell today was 1929.1. So just barely to it. So most of these major market indexes are near an area of supply that may act as a factor to push them down tomorrow, which is why I took the put position. You know, again, you just never know. Going short markets that look so aggressively bullish like this NASDAQ, which is just unbelievable, is a dangerous thing to do, which is why I have to make sure I have my stop in place and move forward from there. If I get stopped out, it's okay. Yeah, good point there, Questlock. Not into basketball, but how about the Nuggets? Not only how about them Nuggets, but how about them Vegas Knights? You have two sports franchises that have never won a championship, never. And both of them won the championship on back-to-back days. Bravo to both teams. That guy Nikola Jokic for Denver, man, what an amazing athlete, one of the most humble, down-to-earth, just great guys you'll ever meet. I wish I get to meet him. He seems like just a fantastic dude. And then those Vegas Knights, sheer domination of the Florida Panthers. So that was a great series of sports going on. Yeah, so cheers, congratulations. I don't have any visuals or fireworks I can do, but it was a great couple of days, or great series for sports fans. Lisa says, do as I say, not as I do. Exactly, right? You guys can't do this, but I can do it. Yeah, love politicians. Let's see. Ganesh says, I understand senators should not be allowed to trade, but given that they can trade, if individuals think the price is mispriced upside mispriced upside, the same senators can also think so in short. Correct. But they shouldn't be able to short. And it's irrelevant of if that security is overbought or not. Shorting is not anti-patriotic in itself because I don't make the rules. I don't establish the rules for this country. None of us here are on the rulemaking councils that say, hey, what I'm saying is law for all citizens. Now, a politician's job is different. That, to me, if a politician shorts something, that is anti-patriotic. Because now you are capitalizing on that downside move, and your incentive as an elected official to make that problem better goes away. So if I'm a politician and I short the markets for, material stocks, and that bill comes to my table for infrastructure improvement where billions of dollars are going to go to these infrastructure companies, what am I going to vote? Yes or no? Voting yes would help America improve a lot of their infrastructure, but voting no would help my portfolio because I'm short material stocks. So I short material stocks and I vote no. That to me is the problem. You start doing what's best for your pocket, not what's best for your country. Sports betting is only going to be up benefiting all those betting companies. Of course, right. In the long run, the house wins. Well, they establish the odds for a reason. The house usually wins, which I need to do a show on that called The House Always Wins. Did Rivian get delisted? Not sure. I don't think they did. It doesn't look like they got delisted. Let me see. No, they're still there. There's Rivian trading today. Rivian Lucid out of the NASDAQ 100. So not delisted. They just got removed from the major market indexes. So yeah, they're still there. They're still publicly trading, but they're not in the NASDAQ 100 indexes. Don't forget the Coachella Valley Firebirds. What did they win? I don't even know the Coachella Valley Firebirds. BMET? What do they do? Let me know. Politicians are the ones that have to make the laws against insider trading. Right, exactly. That's why I was really surprised when AOC actually passed a law for that. Shocking. Like, wow, okay. You think they're going to vote on that one? Okay, let's put it to a vote. Who thinks that we should all stop making millions of dollars as we serve as senators? Any yays? Okay. All nays it is, except for AOC over here. Yes, it's ain't going to happen, man. The inmates run the prison when it comes to Congress. Oh, boy. Let me see. I had a couple things. So, Gene, you asked me this question here. It says, I'm sure you're going to cover it today, but can you please talk about the pause today? That we did. We've covered that one. Let's go to Linda's question here. Linda says, what's your take on CCL, Carnival Cruise Lines? I purchased 100 shares at $9. I'm excited because this is my first time purchasing with this many on this stock. Based on what I've learned at OTA, I see is on a rally. However, I don't see any demand zone as of today on the monthly time frame. Should I hold it for the long run? And then what's your take on TWL? Let's go look at CCL. Now, summer's coming. People have now pretty much thrown in the towel to COVID and said this was a joke for the most part. It was way overblown. Granted, there were a lot of people that passed away from it, but not as catastrophic as everyone has made it out to be. So here's your Carnival Cruise Line, which obviously in 2020 just imploded. I had a great trade on 2020 on Carnival. I think ultimately, long term, I think you're great holding Carnival Cruise Line, but you really have to have a long-term time horizon here, Linda. You really do. It's been a beautiful run, especially over the past month. But I'll put a line right across where you were talking about. You're 100 shares at $9. So you're down here. It's looking great. So it really depends on what your objectives are. Again, if you're long term, like talking years, then don't worry about it. Just let it run. For me personally, I would probably move a stop loss up. So the red line down here at the bottom is where you're long from. I would probably move a line here and say, if it gets below and starts closing this gap, so if it gets below 14, I'll just dump it. So you could sell half now and let the second half run. That's one thing to do. Or just move your stop up to really obvious levels. So there's two areas here. You mentioned you couldn't find any demand zones. Well, I would be looking at the origin of this gap, which is $14. And then there's another one down here at 13. So those become the 2 points where I would be interested in getting out of my long position. At this point, it's at 1560. Great. Looks absolutely fantastic. And if they can continue to get business and start getting more people back on cruise ships, which I love cruise ships. I actually would love to be going on a cruise right now. Trailing stop would be wise on Carnival Cruise. Yep, that's what Big Eb said, and that's kind of what I mentioned here. I'm using a manual stop loss to move up, but you could be using a trailing stop, an automated trailing stop as well. So I say you stick with it. Looks great. You know, it might be moving a little too far too fast, but summer's coming. Those cruise ships might be filling up. I've seen some amazing deals. TWLO. Oop, TWOL. I got typing backwards here. All right, so Twilio. Price-wise, meh. I don't like it. You know, I'm looking at this price chart. I don't really see it doing much until you get above this level here. So I would say until it gets above $79.70, call it $80, I'd leave it alone personally. That's simple and easy. You know, I know that there's a lot of fluctuations, but it hasn't made new highs, and it's just kind of traversing sideways here. So there you go. All right. The Calder Cup Finals. Congratulations to the Coachella Valley Firebirds. First time tournament winners, I hope, to join the trend right now. Okay, let me see. What else did I have? Oh, I wanted to revisit this one. We talked about this yesterday, and I did a poll, and most of you said you would get out of that security. We said 1321 is where we would have dumped it. That is Scott. He says, I've held IPX for a couple months on a friend's recommendation. On a day like today, what would you do? We all, resoundingly, I think the vast majority of us said, sell it, get out of this thing. Did you see what happened today? Wah, wah, IPX. This is what should have happened. It tanked. It was down 36% today, down another almost 4% in the after-hour session. So I would have dumped it at $13.21, saved myself almost $5 per share. That's when you have a gift horse that shoots up 200% in a day. Bail, jump ship. Director at work got a great all-inclusive 9-day trip to the Caribbean. Yeah, a friend of mine recently went to the Bahamas, and they said, buy one ticket, get one free. Plus, they gave him free the all-you-can-drink pass and 2 excursions per person. Like, that is a great deal, man. Really good. Questlog says, trailing stops are a great idea, but I haven't been able to get them to set up to work efficiently. Still in TradeStation, though. Well, the main thing when you're looking at setting up your trailing stop is what is an acceptable number for the trail stop, right? So if you're on a daily chart, well, you might want to pull up your daily ATR to get an idea of how much this thing moves a day. So, you know, ATR is critical in helping you determine what that stop loss is. Then just plug it in. Almost every platform now has some trailing stop functionality. You can also do, some offer just a percentage trailing stop. So you can say, okay, I'm going to give 5% back max. All right, set your trail stop to 5%, and we'll just keep on moving up until it gets stopped out at a 5% pullback. All right, I think that's going to do it for me for today. Actually, no, let me get to this one from Les. I really wanted to wrap this show up earlier, but not going to happen. Les says, on the Fed watch tool, we see that the probabilities of what the Fed might do, but who is being polled to determine these probabilities? So it depends on what you're talking about. If you're talking about the dot plot, that is actual Fed members, right? So if you're looking at the economic projection document that they give out, or the dot plot, that's the actual Fed members. If you're looking at that Fed funds futures that we just talked about, those are just traders, right? That's just the market as a whole. So yeah, that's where those two numbers come from. Generally, it's going to be the voting members at the Fed for the summary of economic projections, the SEP, and for any of the other data points that Jerome Powell talks about. That's from the voting members. These Fed funds futures I look at, that's actually coming from traders. And I think that Lee actually asked me to go over, since we're halfway through the year, I'm going to do that tomorrow since I need to wrap up the show today. And then I will get into more questions that I have not get a chance to answer on today's show. So here's what's cooking for tomorrow. This is your economic calendar for the 15th of June. All right, June gloom is amongst us, but not really for the markets. They've been doing pretty darn well. For the U.S. markets, you can see you have retail sales, Empire State Manufacturing Index, unemployment claims, the Philly Fed Manufacturing Index, and import prices. So quite a lot happening there tomorrow with earnings for the U.S. markets. And there are a couple other notable pieces in here. You can see Canada has housing starts and manufacturing sales. Down near the bottom, you can see we also have natural gas storage and TIC long-term purchases for the U.S. But really, the one that I'm interested in is the Bank of Japan. Now, it's a tentative announcement, so not really sure if it's going to come out tomorrow. It might. They're right now at 0.1%, and they've been there for a very long period of time. So I will show you that chart here just to kind of drive home my point. Let's go and look at the Bank of Japan. 1 second here as I bring that up for you guys. That's Thursday. Let's go to, there's Thursday. Where's the Bank of Japan? There we go. So here is their rate. You're like, what chart? Where's the chart? There isn't a chart. They've been at this level since 2015. Right? They've been there for 8 years at negative 0.1. You talk about punishing savers, right? Good luck. You're losing money by keeping your money in a bank. Forget about inflation. Just the actual rate of return you're getting is negative. So they've been at negative 0.1 forever. They've had a recent change in leadership over there, and I get the feeling that we're going to start to see in the maybe this year, certainly next year, they'll pop out of this negative 0.1 thing and start to move to a norm, do what most developed countries are doing, which is higher rates, right, to slow things down. So that's the announcement happening tomorrow, tentative. Not exactly sure what time that's going to come out, but that will be an interesting one for anybody who's trading that Japanese yen currency pair, which I'll bring up the JPY. We've seen it really kind of consolidate for the past couple of weeks, but it's been on a fairly nice uptrend, right? We've seen that US dollar on an uptrend, meaning that the yen is kind of getting crushed a little bit here. We'll have to wait and see how bad that one looks, but there's your chart of the Japanese yen. We've had that really big pullback in 2022, and now maybe resurging and heading back up towards those not all-time highs, but those highs for the past few years. All right, that's going to do it for me, guys. I need to wrap it up. Hope you enjoyed the show. Hope you enjoyed Ben Bernanke or Jerome Powell's show today. That was a fun one. If you didn't get a chance to watch it, go log in to see to YouTube, and you can just type in Jerome Powell conference today, and you get to watch those. It's good to see what he says about the markets because you really you feel where the driver of this ship is headed, and that may steer some of your long-term investment approaches. If you have comments, questions, feedback, things you want to see, I know I have some questions I did not get a chance to answer. It's because I'm darn busy, but TraderMerlin@gmail.com or put them down below any of the YouTube videos. I will see you guys on tomorrow's show. As I prepare, I've got a question. Do you guys like trivia? How many would like me to do a couple questions of trivia? Because I hosted trivia last Thursday. I'm going to host trivia again this Thursday. Maybe if you guys want, I can throw in a little bit of trivia questions there for you just to have some fun. Anyway, have a fantastic remainder of your day. We'll see if we get a nice little pullback here from the overhead supply zone in our markets. Click that like button. Share it with your friends. I will see you guys tomorrow. Take care.